I think we're in a bubble right now. Hanke's bubble detector hasn't been this high since the dot-com bubble that it predicted, and the crash that we had in 2007, 2008 that started the great financial crisis. So.
Welcome back to Metals and Miners. I'm its founder and its host, Gary Bohm. Today we have a fantastic discussion lined up. We're fortunate to have with us Professor Steve Hanke, Professor of Applied Economics at Johns Hopkins University and founder and co-director of the Institute for Applied Economics, Global Health, and the Study of Business Enterprise at Johns Hopkins. Among his many lifelong achievements, Professor Hanke served on President Reagan's Council of Economic Advisors. Professor Hanke, welcome to Metals and Miners. Thank you so much for joining us today.
Great to be with you, Gary. Speaking of miners, you should mention that the first faculty position I ever had was at the Colorado School of Mines, which is the world's #1 mining school.
My oversight and my apologies.
Well, don't worry about it. But anytime the word mining or miners come up, that Colorado School of Mines pops into my head.
Well, that's wonderful. You've had an incredibly distinguished career. I read there was a document you sent me, and it's incredible. Some of that is going to be questions in here today. So let's roll in. President Trump is pushing for significant government restructuring, regulatory reductions, foreign policy changes, notably aiming to end the Ukraine conflict, implement tariffs, change the global order, and so much more, which collectively could have profound market implications. What do you see as those implications moving forward?
Well, that really opens the thing up. Let's start with the one thing that we do know for sure is that President Trump, in fact, is a mercantilist. He has a lot of ideas. Some of them are conflicting and contradictory, and some are kind of a moving target. You don't exactly know what he's thinking until he either puts it out on social media or says something in an interview. But there's one thing that's solid, and that is he's a mercantilist. Now, what does that mean? This goes back. The mercantilists were very much in power and popular in the 16th, 17th, and 18th century in Europe. And their idea was that you had to get wealthy, you had to be exporting more than you were importing. And so that's Trump's idea. And a lot of businessmen have this idea, and the reason they have it, if you're running a business, you want the incoming revenues to offset any offsetting costs. So they're thinking about free cash flow. They want positive free cash flow if you're running a business. And they think the same thing holds for a nation. But that's something called a fallacy of composition. Taking something small and expanding it up and aggregating it up to a national level. Now, we've had a trade deficit in the United States. We import more than we export since 1975. And this is not a problem because it's easy to finance, and it's a good deal for Americans. They're basically consuming a lot more than they would otherwise be consuming if we weren't allowed to finance at a low cost this deficit. So the question is, why do we even have a deficit? And you get that from an identity in economics, a savings investment identity. And if you're saving less than you're investing, you are running a deficit, and that deficit is filled by imports. And it's financed by the importation of foreign capital. So most people just don't understand the identity and how it works. Why does China run such a big trade surplus? Because they have an excess of the savings is way greater than investment in China. And the reason why, there's essentially very little or minimal social safety net of any kind. So Chinese save for old age. they, they put it under the mattress, knowing that eventually they're going to stop earning income and they'll have to live off their savings. So, and what about Switzerland? Switzerland always runs a big trade surplus for the same reason. They have a savings surplus. Savings is greater than investment. Same in Germany. Japan. Look at Japan. They run a big trade surplus for exactly the same reason. They have huge private savings that swamp private investment. But if you look at it superficially, their fiscal public deficit is huge. But the private savings surplus swamps this deficiency in the public sector. So at any rate, looking at the trade deficit is not a good thing to be looking at from a public policy point of view. Trump's looking at it, focusing on it, because he is a mercantilist, and his conclusion is, well, every time you have a trade deficit, you're basically getting taken to the cleaners by the foreigners. No, the trade deficit's made in the United States because of the savings deficiency that we have, and most of that, Gary, just to wind up on this, most of that deficiency is generated in the public sector. The private sector actually has a big savings surplus in the United States. It's the fiscal deficit that causes the overall aggregate savings investment gap or deficit to exist. So if you thought the trade deficit was a big problem, it's very easy to solve it. You just balance the federal budget and the thing is going to be solved overnight, and we'd stop running a trade deficit.
So do you think this
mercantilist... Forget the tariffs. Tariffs are not going to change anything. It's all run by the savings and investment identity.
Okay, so I do want to touch on the tariffs in a moment, but I want to ask you, this mercantilistic view that Trump is taking that's different than some of the previous presidents, is that going to have an impact on the markets, in your opinion?
Well, it'll have yes, it will, because he thinks a trade deficit is bad, and he thinks that you can solve it. You will close it by putting on tariffs. Tariffs won't do anything to this overall deficit. It's created by this savings and investment gap, and tariffs have nothing to do with that. What tariffs will do is rejigger the configuration of the imports coming into the United States. In other words, if you put a huge tariff on China, bigger than the new 10% one that he's put on, but even the 10% one will do what? It'll cause importation from Vietnam, Indonesia, and other places to increase, but the overall total is never going to change. And the impact on the markets will be, of course, it will impact the markets in China and Vietnam and Indonesia or wherever else those new imports are coming. Why do you think the stock market has been so hot in Vietnam? This kind of thing's already going on, you see.
Okay.
So it will affect international markets and international currencies. By the way, it'll be negative for the Chinese yuan.
Okay, so I do have a currency question coming up here, but Professor Hanke, Treasury Secretary Scott Bessent recently said that they plan to get creative with the asset side of the balance sheet. Many believe that they're talking gold, and there's a lot to talk about there, and we're going to get to gold here in a moment, but I really want to focus on the U.S.-owned real estate for a moment. One of your early assignments as part of President Reagan's Council of Economic Advisors was to analyze the federal government's land holdings and make recommendations about what to do with them. My question is do you expect the current administration to get creative with all of the U.S. owned real estate? And if so, what will that look like?
Well, that'd be a great thing. With Reagan, I was Reagan's so-called privatization guru. He threw me the ball. It happened to be an area that I actually had quite a bit of expertise in, and so I designed a privatization program. And that privatization program for Reagan would have sold about 160 million acres of commercial grazing land that's owned by the United States on the asset side of the federal government's balance sheet, and also sold about 80 million acres of commercial timberland. It never happened. Reagan signed off on it. His budget message that I drafted the privatization part of for the fiscal year 1983, it had it all in there. It was stopped by Congress. So Congress is a problem. And let me give a simple example that people can understand. The big reason, by the way, that we were stopped is that the environmentalists at the time said, "Oh, they're going to be paving over the national forest, and it'll be terrible for the environment." Actually, if you look at the environmental quality on publicly held forest lands and grazing lands, the publicly held lands are in terrible shape. That's why we have all these forest fires, by the way. Forget global warming. What's going on out there? You've got old growth timber that the federal government doesn't cut and harvest. You've got a lot of old trees that get insects get in there. They get disease. They blow down. They fall down on the forest floor, and you got a lot of brush in there that they don't take care of. What happens? You get a lightning strike, and boom, the thing goes off, and you got a hell of a fire on your hands. So that's the timberland. The grazing land, by the way, if you take aerial photographs, you go out to Wyoming or Nevada or any of these places where you've got a lot of federally owned grazing land, and when it abuts the private land, you can see visually, just go over the fence, and the private land is looking pretty good, and the public land will be in terrible shape. So it was a phony argument, but it stopped us. We never got any of this done. We never got much done, by the way, selling surplus assets. That was part of the privatization program, because there are a lot of Air Force bases, Army bases, naval bases, and facilities that the Department of Defense owns. And you go in and try to privatize one of these things, and you're in a state. You're out there in West Virginia right now. If we tried to shut a base down in West Virginia, you have 2 U.S. senators, and you'll have 1 congresswoman or congressman from the district where that base happens to be, and they'll fight it tooth and nail, and they'll stop it. In most cases. So DOGE, the Department of Government Efficiency, and Musk and Trump have their work cut out for them if they're going to move ahead in that area, which they should, by the way. I'm all for it, 100% for it.
So you don't think they're going to get too, it doesn't sound like you think they're going to get too creative around the federally owned land. It's too cumbersome to try to work through all the channels.
I think they're going to give it a try, and I hope they have success. I'm just telling you, in our case, we ran into a tremendous pushback and buzzsaw, and it was mainly the environmentalists.
Okay, so maybe there'll be a little bit less pushback this time around.
By the way, there was conservative pushback on that too, because a lot of the conservatives in those days, there was something called the sagebrush rebels. You might have recall that. And the Secretary of Interior was James Watt, and he was a sagebrush rebel. And what they wanted, they didn't want privatization. They wanted the federal government to transfer those federal lands to the state governments. And Watt had cut a deal with a lot of the Western governors to do just that. So we were getting pushback from the environmentalists on the left and the conservatives on the right. for the reasons that I've just given you. So
So
these things are not simple chip shots.
yeah, so maybe the gold side of the asset, of the asset ledger will be easier to deal with, and we'll talk about that in a moment. I want to go back to the tariff discussion. You talked about how really all the tariffs are going to do is shift, where we purchase things from, and I don't disagree with that. But the last time tariffs were enacted with a heavy fist was in the 30s with the Smoot-Hawley Act, which ended up greatly exacerbating the Great Depression. What are you expecting this time around? Is there going to be economic impacts, or do you think it'll be relatively smooth sailing?
Well, it depends on how high they go, because the Smoot-Hawley tariffs, we're talking about getting the tariff level up to about 50%. So what's Trump been talking about? He's talking about a tariff of 10% on China, and he's threatened to do 25% on Mexico and Canada, and now he has this idea that whatever a foreign country has for its tariff, we will have reciprocal tariffs, and we'll have the same tariff in the United States, which, by the way, is kind of a stupid idea in a way, because he wants America first, America to be making all the decisions. But with reciprocal tariffs, you're giving up sovereignty. The foreigners will be setting the tariff, because if the foreigner has a 50% tariff, then Trump says, well, I'm going to do the same thing and have a reciprocal tariff. So the question, the point I'm making is the foreigner will actually set the tariffs that the U.S. imposes if we have this reciprocal thing. So it's all in flux right now. That's why I say it's very hard to tell exactly what's going to happen. The only thing we do know is that Trump has an idea in his head, and he's a mercantilist, that he has other ideas, like about currencies, Gary, that where you have contradictory things in one man's head, the president's. He wants everybody to be using the U.S. dollar. And at the same time, he's promoting cryptos. He says cryptos are a currency, and he wants people to be using cryptos. We're going to become the crypto capital of the world, according to Trump. So that's totally a contradictory idea. Another contradictory idea, the BRICS countries are talking about starting their own currency. And Trump says, well, if you do that and you don't use the dollar, I'm going to slap you with a 100% tariff. Well, there's a problem. Some of the BRICS countries, like Russia, are sanctioned and prohibited from using the dollar. So you see the contradictions going around? Very, very quickly, you get the whole thing tangled up and kind of a mess to sort out exactly what the impact will be. The impact, the big thing though, the Smoot-Hawley, the tariff was much higher than anything Trump's proposed, except this so-called 100% tariff against the BRICS. That obviously exceeds the Smoot-Hawley, but Smoot-Hawley was a key driver in the Great Depression, by the way.
Yeah. So I guess at this point, with everything in flux, as you rightfully point out, and the varying levels of reciprocal tariffs and isolated tariffs, et cetera, and the negotiations that are taking place, until we know for sure where things land, it's hard to gauge what the impacts will ultimately be.
It's hard to gauge the impacts, Gary, but I as a unilateral free trader, like, by the way, Reagan was, and I had the portfolio for Japanese trade in Reagan's Council of Economic Advisors. And as you recall, then, who was the enemy of the United States because of trade? It was Japan. Now it's China. China has replaced Japan as being the big one that fills that gap, that savings investment gap. Japan was doing it in the early 80s, then now China is the big one. But they're all bad. All these protectionist measures are bad. I'm a unilateral free trader, and I'm against all tariffs, quotas, non-tariff barriers, sanctions. sanctions are a big deal, by the way.
Yeah,
Washington uses sanctions all the time. That's just a protectionist thing.
there's a lot of protectionist policies that are taking place. They seem to be ramping up over the years. Let's talk about currencies for a moment. Professor Hanke, many currencies are at extremes. They're causing distortions in economies and markets around the world. They're exacerbating the wealth divide. You talked about Japan, the carry trade, China, their yuan being so devalued versus the dollar acting as a wrecking ball at times because of its strength. Many believe that a reset of the currencies has to take place, essentially a new Bretton Woods arrangement, if you would, to smooth out global trade and repair these distortions. Do you foresee a Mar-a-Lago deal coming? And if so, what do you expect it to look like?
I don't see something coming. You mentioned Bretton Woods. Bretton Woods, was officially shut down in 1973. I mean, it started in 71, but the thing was wound up. I think actually, technically, it was signed off on and done away with officially in 1976. But at any rate, you got the early 70s. That was a system in which most of the currencies were linked together in kind of a quasi-fixed or linked exchange rate system. Then that was done away with, let us say, in 1976 officially. And now we have a non-system. We don't have an international system. And the question is, well, whether we would come back to some kind of system. And I don't see that on the horizon. I don't see any kind of coherent proposal for, shall we say, a new Bretton Woods, something like that. I don't
Okay.
I don't see it taking shape. There's a lot of talk about currencies, but nothing in terms of like an international system of something.
So there's this, bipolar world that's emerging. You have, China, Russia, the BRICS, as you talked about earlier. They are trying to build out a new system, whether they're successful or not. I mean, they're putting enough pressure on the West that Trump would even come out and say, hey, we're going to put 100% tariffs on anybody who are, going to go down this path. So clearly something is taking place over there. And then you have the West, the G7. So there seems to be this, this power struggle that has formed and is taking place. And maybe it's not as robust as some might lead everyone to believe, but there does seem to be progress also in this multipolar world. So, I mean, is America okay with, this movement towards a multipolar world? Will they, force it back under this American hegemony, that we've enjoyed for the last decades? What do you see there?
Well, I think you have several power bases that have actually always existed. I mean, the big elephant in the room has been the United States. Most people, most Americans don't realize the United States is a big imperial power, but so that's that's just life in the fast lane, as they say. But I see more talk about kind of a balkanization or splitting apart in different groups. That's clear that that's happening, and part of that happened. The U.S., by the way, is more or less the culprit in this, because when George W. Bush was president in 2008, he opened the door for Ukraine to receive an invitation to go into NATO, and that went down this slippery slope, and we ended up being eventually the Russian says no, this is a red line. You're not doing this, and then there was one thing after another, and ultimately the Russians invaded, and we have this war, and then sanctions. The U.S. ramped up in the West all kinds of sanctions, and then what was BRICS and kind of a didn't amount to much of anything. It actually coalesced against the United States and Europe. So that's what's really going on. I mean, I think the U.S. is really been the culprit, if you will, in forming a more balkanized thing. Now, you mentioned the BRICS are talking about a currency, for example, but it's really just talk. They have no plan for a currency, and I'm not certain they know what the word currency means. Now, they also are talking about something that should be of interest to you, and that is starting their own commodity market, futures market. And that's very, very much in its infancy too. It's further along than the currency, by the way, but they haven't even indicated, well, if they did this, where is it going to be? Is it going to be in Beijing? Is it going to be in Moscow? Is it going to be in Tashkent? I mean, so these are this is a lot of rhetoric more than concrete plans. That's what's going on.
Okay. All right. So, Professor Hanke, President Trump has had a heavy emphasis since he's started the second administration on the Western Hemisphere: Greenland, Panama, Canada, Mexico, Venezuela, Colombia. It's all dominated the headlines in the last few weeks. All of this kind of reinforces Secretary Rubio's assertion that a return to a multipolar world where great powers with their spheres of influence can actually coexist. It all seems to be basically underway as we speak. If such a transition could be achieved peacefully, it really would be a momentous shift that reshapes global affairs for the next several decades. The change, though, wouldn't be without a victim. It seems like the EU stands to lose the most, and who even knows if the European bloc can survive Trump 2.0 like it is in its current structure. How do you see what's taking place with the rhetoric, with the efforts on Canada, Greenland, the Panama Canal, et cetera? How do you see this shift taking place, and what are the ramifications for America if the EU does in fact disintegrate to some degree?
Well, the interesting thing, you started with Rubio. He's the new Secretary of State, and I think he so far he's kind of impressed me. He this statement about the great powers in the multipolar world and no longer one hegemon, running things. I think he's just a realist. It's actually happening. So you mentioned the transition. How about the transition? Well, it's spontaneously, Gary, happening, and Rubio realizes it. So he might be able to operate very effectively as a realist, realizing, okay, that's the hand I've been dealt, and that's the U.S. has been dealt, and we're going to deal with it. So that's one aspect to the thing. Now, the other aspect, you talked about Colombia and South America. Well, I think what you're seeing the U.S. moving a little bit into is more solid recognition of the Monroe Doctrine, and the fact that, I mean, the long and the short of the Monroe Doctrine is Latin America is U.S. de facto U.S. territory. That's the Panama thing, the Colombia thing. All of that it's just old Monroe Doctrine.
Should we just extend to Greenland too?
Well, now that gets into another kettle of fish. That has been talked about over the years, as you know, and geographically, it's a very strategic location. And from Trump's point of view, as a real estate guy, it's an interesting piece of real estate. Although I don't know why you'd want a Trump Tower, and
I mean, evidently Gaza is as well. So
yeah.
All right.
So at any rate, let me come to Greenland and tell you something. Again, I don't know if it was in that autobiographical piece of mine that I sent you, but when Thatcher was the Prime Minister of Great Britain, as you know, they had a little problem with the Falklands. Remember the Falkland War, or as the Argentines call it, the Malvinas. And Thatcher's economic guru at the time was Sir Alan Walters. He was located at 10 Downing Street, and he happened to be a very good friend of mine, a collaborator. We wrote a couple books together. For 10 years, we wrote a Forbes column together. And Walters was a professor and a colleague of mine at Johns Hopkins, a very, very distinguished economist. So Walters and I came up with an idea that we gave to Thatcher about the Falklands. We said what we should do is have a market solution to the Falklands, and that is if the Argentines wanted it, they could put in escrow, let's say $1 million for each resident of the Falklands. And then you would have a referendum, and the Falklanders would decide, do they want to take the $1 million each and become part of Argentina, or do they want to just stay with Great Britain? So I think with the Inuit, the indigenous people in Greenland, that's what we should do. It's part of Denmark, so let's say if the U.S. wants it, they could put $5 million or something like that in an escrow for each one of these indigenous people, and have a vote. You want to take the $5 million and be part of the United States, or whatever the number is, or do you want to stay with Denmark?
That's interesting. And there's only, from what I understand, 55,000 inhabitants, so it wouldn't be an extraordinary
No,
amount.
but it wouldn't be extraordinary. By the way, or the U.S. could. There's another option. The U.S. could do like a leveraged buyout, and the leveraged buyout would be an amount equal to 2 or 2.5 times the GDP of Denmark. And then you ask the Danes, do you want to take it or leave it? And if they took it, it would be a terrific deal for them. They'd have a huge sovereign wealth fund, and all the indigenous people would be millionaires in Greenland, number one, and the residual would be a huge sovereign wealth fund that would mean Denmark would be in hay for forever, basically. So,
all right, well, that would be an amazing strategic acquisition. Let's talk about another strategy being deployed by the Trump administration, and that's the Doge audits that you talked about. So they're spreading Musk and President Trump, they've been spreading the Doge audit findings of the government operations all over social media. They've been revealing significant corruption, much to the delight of Trump supporters, also a lot of just waste and silly spending. Projected Doge savings is already at $110 billion, or $700 per American taxpayer. They also just found $4.7 trillion in unallocated spending through the Treasury. They just started reviewing the IRS and the Social Security, where they found some people over the age of 300 receiving Social Security payments. They have not yet gotten to the Defense Department, Medicare, and so many other areas of the budget. Musk has been saying that Doge could remove as much as $1 trillion from the deficit by 2026. He seems to be on track. He's already 10% there. Market data integrity and governmental transparency has clearly been a major problem. And with all that Doge is doing to fan the flames, Americans want change, and they want it now. It seems that a systemic change in how financial markets operate could come about if government corruption is addressed this time around. Will stopping these financial abuses lead to less liquidity in markets, potentially affecting stock valuations? And with the amount of government workers impacted through Doge and their audits, is Doge now a potential recession catalyst?
No, I don't think so. I think it's a potential confidence booster and boosting the market. It changes all the sentiment in the market. if in fact they're able to deliver even half of what they're saying they're going to deliver, it'd be very significant and I think positive. Now, you mentioned Europe in this. Remember, we were talking before about the geopolitical scene, and Europe seemed to be kind of the odd man out. Well, they're the odd man out because they're covered with government. The U.S. federal government's only about 25% only about 25% of U.S. GDP, and in Europe, you're running over 50% of GDP is taken up with the government. The government just crowds everything out. You have huge taxes, and what you're asking about markets. You know what the market discount is in Europe relative to the U.S. stock market? It's about 40%. If you're listed in Europe, your valuation is going to be cut by about 40% on average, relative to being in New York. So the European discount, the markets discount all of this. This is the way it works, and Doge is going to be if they deliver, will be a positive market sentiment factor and confidence factor, and shrinking the government relative to the private sector, making the private sector get relatively bigger. That's a positive. And if you look at the growth in GDP per capita since 2008 in the United States versus Europe, Europe is just flatlined. It's not going anyplace, and the U.S. is going up. This is one reason they have so many political problems right now. We've got an election coming up this weekend in Germany. It's absolute chaos because Germany is tanking big time. France, we've had one government after another. It's tanking. It's not going anyplace. Spain, the same thing. Italy, the same thing. So
and they haven't done themselves any help with their energy policies either.
Well, the energy policies are a complete disaster. You have Germany is the big manufacturing hub in Europe. About 23% of GDP is in manufacturing, whereas most countries in Europe it's about 10, 11, 12%. But what they've done with Merkel, when she was the chancellor, they've nixed nuclear power. That's out. Now the Greens are in control. They've nixed coal. So they've got solar and wind and tremendously high energy prices in Germany, and German manufacturing it's
getting killed.
shrinking. It's getting killed.
Yeah. All right, so let's move over to gold. I know, Professor Hanke, that you've heard the calls for the audit of the U.S. physical gold holdings. Some people say it's not there. Some people say it's there, but it's been leased out 100 times. You know, there's also broader implications here of an audit. If the audit were to occur, it would be lengthy, it would be complex, it could be potentially embarrassing if something is found that the government wouldn't want to be found regarding the gold holdings. Taking all this into account, what's your reaction and expectation of a full-scale audit of U.S. gold holdings actually happening, and what would you expect the results to be?
Well, you never know what an audit. I have no problem with auditing the government. I mean, whether it's the gold holdings or the whole balance sheet. We don't even know what the balance sheet is of the government. I've had to deal with this with Reagan and the privatization thing. Reagan says, let's shrink the size of the balance sheet of the federal government. And so the first question to me is, well, what's that balance sheet look like, Hanke? And but you can't believe it. I mean, the Department of Defense, which has a lot of assets, by the way, has never been audited. They can't do an audit. It's technically, it has not been feasible to do an audit of the Defense Department. And by the way, that's the next place that Trump and Musk are going. It's in the Defense Department. Now that's going
but
to be
that'll be unbelievable.
But once they get in there, there's so many special interests in the military industrial complex and so forth that'll be a real hornet's nest when they get in there. But
Absolutely.
I hope they get in there. Now the gold
I
thing,
know all of these have been probably warm-ups for that, and they're taking heat from everywhere. And I know there's lawsuits coming, but do you expect an actual audit of Fort Knox and Manhattan to take place?
I wouldn't be surprised.
Well, that would be wonderful.
I would
All
be.
right, so
Let's put it wouldn't surprise me. I'm not predicting. I mean, my crystal ball on the audit of gold, federal holdings of gold, is in the closet right now, so I can't tell you.
okay. Okay. All right. Well, let's move over with gold, though. We're going to stay there, but you did hear about Treasury Besant's comment about getting creative with the asset side. There's been a lot of discussion about revaluing gold that the U.S. holds, marking it to market instead of the current 42.22 that is on the Treasury books. If they move forward with that, how can they revalue the gold without destabilizing the dollar, the Treasury markets, or even causing inflation?
Oh, I don't think of it. Number one, inflation is caused by changes in the money supply. Always and everywhere. There's no significant inflation that's ever occurred in the world. And when I say significant, I'm talking about an inflation of 4% a year that lasts for 2 years or longer, that hasn't been preceded by sharp increases in the money supply. So the changes in the money supply cause inflation. Remember what Milton Friedman told us: inflation is always and everywhere a monetary phenomenon. So all of these other things, it's second and third order things going on, and that's one thing, by the way, that people in the markets are in a way too data dependent. They watch what's coming out on the data almost every hour or every minute or certainly every day or every week, and many times they're just getting whipsawed. The data go up, the data go down, all over the place, and about 95% of it is either wrong or irrelevant. So I think you have to keep your eye on what is important. What's important is changes in the money supply, and revaluing the gold have no effect on the money supply at all.
Okay, so are you pro revaluing the gold?
Oh,
Are
I'm
you
always for marking things to market. I see no problem with that. But since the U.S. doesn't really have much of a balance sheet that's transparent, it's all irrelevant. It doesn't change anything.
okay?
So let's say we revalue gold and market to market, and we place it where everybody can see it on the balance sheet. It's going to be buried in the balance sheet with a bunch of other stuff that we don't even know what the other stuff is. We don't know what the value of the other stuff is. What's the value of the federal land holdings? The federal land holdings, by the way, public land holdings in the United States, including state and local land ownership and federal, it's over 6 times larger than the surface area of France. It's huge, massive.
That's amazing.
You're gonna have appraisers going out there appraising all this stuff. I mean, it's a joke.
Right.
But,
Okay. Well, I get your point. Yeah, I get your point about the balance sheet.
I mean, look,
and
Gary, the gold bugs would go into orbit with this. This is a big topic of discussion for them.
I lost you.
But it's in the grand scheme of things, it's just irrelevant, really.
Okay. All right. So I'm sure you know who noted economist Jim Bianco is, Professor Hanke. He recently said in a recent interview that the Trump administration is seriously considering forcing U.S. allies to exchange their existing U.S. Treasury bonds with zero coupon perpetual U.S. Treasury bonds in payment for U.S. military protection rendered over the last 50 years. He said maybe this is where Judy Shelton's U.S. Treasury physical gold bonds come into play. This way, at least U.S. allies won't be killed by inflation holding zero coupon perpetual U.S. Treasury bonds if they're physically backed by gold. Okay, so your reaction to Jim Bianco's statement regarding the 50-year gold bonds floated by Judy Shelton?
Well, I think those should be looked at very seriously. I of course know Judy. She's a colleague of mine, actually. She's also a senior fellow at the Independent Institute in Oakland, California, where I'm a senior fellow, and I've known Judy for years. And when she was nominated to be a board member, a board of governors member at the Fed, I said I thought this would be a good idea. You'd get some fresh thinking in there. She's thinking about things that the other governors aren't thinking about. So my view is that this is a serious proposition, and the perpetual bond thing, by the way, councils, British have had those for a long time. That might be a good idea. That's another thing that
Okay.
you have to.
All right. Well, listen. Hey.
You basically have to have like in effect an expert's report on these things. It's a proposal. I think both of these things that Jim was talking about are reasonable and logical and so forth. So let's have a real report. It's like an audit. It's a little bit like an audit. Let's audit the Defense Department to find out really what's going on there. Let's have an expert's report.
Very much needed.
Perpetual bonds. Instead of shooting from
That's a great
on this stuff. I'm all for let's see an expert's report and then get our teeth into it. Get some red meat in a report so we can discuss it.
That's a wonderful proposition. Okay, well, hey, everyone, welcome to, thank you for tuning into this fantastic interview. This has been an amazing discussion. Before our final set of questions for Professor Hanke, I want to direct everyone interested in the metals and mining sector and investments to dive into our Substack at metalsandminers.substack.com. Join our community and receive a free report titled, "If You Don't Own Gold, You Know Neither History Nor Economics." That's a famous quote by investing legend Ray Dalio. Consider upgrading to our premium Substack for access to the Inner Circle, the Asset Sentiment Tracker, the Critical Reports Library, and Mining Analysis Reports. You get key intelligence, exclusive content, insider knowledge, and you also enjoy discounts on our investment resources. But even without the premium subscription, there's plenty of free content daily. So visit metalsandminers.substack.com to join us and explore. So thank you for tuning in. Also, I'm positive you've enjoyed this conversation with Professor Hanke as much as I have. Please let him know. Hit the like and subscribe button and leave a comment below the video. Professor Hanke, let's finish off our discussion with what I call a lightning round. I'm going to ask you to rank a few assets as a buy or a sell by giving it a score of 1 to 100. 100 being an extreme buy and 1 being an extreme sell. And then just give one sentence as to why you take that position. If it's an asset that you're not following, that's okay. Are you ready?
Fire away. By the way,
Okay, on a scale of 1 to...
We're not giving advice here. I'm giving...
no financial advice here.
You're right.
No. I'm just getting your opinion and your perspective.
Okay, go ahead.
So on a scale of 1 to 100, is gold a buy or a sell right now, and why?
100. Let's. It's 100 is pretty extreme. Let's just say 80, and anything over 80. Let's use the 80-20 rule. Anything below 20 is pretty bad. Anything over 80 or above is in the plus zone. Anything below 20 is in the minus zone. So gold
okay.
80.
Gold
80.
Okay, and do you have a reason why?
It's in a bull market. It's going to stay in a bull market. The fundamentals are quite sound, and it's been very strong going into actually some headwinds, and it's been the strongest asset since Trump was elected, or at least one of the, in terms of
That's
a class, right. It's been the strongest, and we have had a very strong dollar, that's usually negative for gold. Gold's going into that headwind, and we've had relatively high real interest rates. That's usually a headwind, and but the bull keeps going.
It's the truth. Okay. Well, you can just keep your answers succinct if you'd like. 1 to 100 gold miners, buy or sell, and why?
Probably 80. Just in the same basket as gold. Nothing in particular.
Okay. Silver.
I don't really follow it. No opinion.
Okay. Copper. Okay.
Paucity.
That's no problem. Copper.
80. Well, let's put it 70 to 80. Demand is solid. It's going up in the green transition, and it's very hard to develop new mines and get new supply in. So I have a positive price by it. Instead of these ranges, I would rather say I'm neutral, or I have a positive bias or a negative bias. For example, copper, I just gave you. Demand is
That's
solid.
fine.
Demand solid, very
Okay.
hard to get new supply, positive bias.
Okay. Uranium.
Positive bias. Nuclear power is cutting edge. Now a lot of it will be these small modulars that use MOX, and that's not uranium, MOX, but positive because it's clean and it's in vogue right now. It's in fashion.
Okay. Oil.
Negative bias. The increment in demand will all be supplied. Can be all supplied by non-OPEC producers, and OPEC has a huge excess capacity. So my bias would be on the negative side, price negative.
All right. That makes sense. NASDAQ.
I think we're in a bubble right now. Hanke's bubble detector hasn't been this high since the dot-com bubble that it predicted, and the crash that we had in 2007, 2008 that started the great financial crisis. So we're in a bubble, and I would say I'm neutral in the sense that you never know when the bubble's going to pop. We are in a bubble. Everything is overpriced, overbought, overhyped, and we're in a bubble. But you just never know when the bubble's going to pop. So I'm just neutral.
Okay. The S&P 500.
Well, that's the same. That's the same as the last question. S&P 500 would be the I measure.
All right. And lastly,
I actually measure the bubble by looking at the S&P 500. That's it. That's in my bubble calculation.
okay. All right. And lastly, on a scale of 1 to 10, with each representing a percentage, like 1%, 2%, where do you see inflation ending this year?
I'd say pretty close to the target, 2%. Maybe a little below. I think sometime this year, the headline CPI will dip below 2%. I don't know whether at the end of the year it's going to actually be there, but sometime during this year it will go down. It's 3% now, and it'll be coming down because the money supply, the stock of money in the United States measured by M2 is actually lower now than it was in July of 2022. And whenever that happens, whenever you get a contraction in the money supply, you get a recession follows and slow down in prices.
Okay. All right. Well, Professor Hanke, thank you for coming on to Metals and Miners. You've been so generous with your time, analysis, and ideas. Would you please let everyone know who's tuning in where they can learn more about your work, how they can connect with you, etc.?
Yes, they can do that on X. I'm at Steve_Hanke, and right now I'm rated as the third most influential economist in the world on X, and I'm just double checking as we speak, Gary. I am right now running at 783.1 thousand followers. So if you really want to see what is on my mind, you can follow me on X at Steve_Hanke. By the way, a couple of things. We didn't do any soft commodities. I know you're mining, but I'm still bullish on cocoa, positive bias. As far as cattle, livestock is concerned, I have a positive bias. Herds are shrinking. Cattle are going up.
Professor Hanke, before I forget, and we finish this time together, do you still have the gold sentiment application?
Oh, yes. That's one thing for trading gold. Abe Kaufness and I have something called the Hanke Kaufness gold sentiment measure. And what we do, we've been doing this for 4 years. We've developed a technique where we can look at every article that comes out on gold every hour and text mine it with artificial intelligence and determine whether the article's bullish or bearish on gold. Then we aggregate all those and we come up with a score, the Hanke Kaufness gold sentiment score, every hour. And that goes all the way from very bearish to very bullish. And for traders, it's very useful because if it gets to an extreme, for example, Gary, if we're an extreme bullish, that extreme bullish will revert back to neutral and go over to bearish. So if the thing hits extreme bullish, that means you liquidate your long position and go short. And you might do that a couple of times in a day. It swings around. There's a lot of volatility. And you can find that at www.goldsentimentreport.com. www.goldsentimentreport.com. And subscribe to our service. See what it's all about.
I will be putting all of that information up on the screen, everyone, for you to click through. Go pay attention to Professor Hanke. He has a resume that there is no parallel. So he's very important in this space. His voice is very important. You need to be listening to what he has to say. He's got some tools out there. Take advantage of the tools. So I appreciate you coming on here and spending the hour with us. This has been a wonderful time together. I plan to have you back on sometime soon, Professor Hanke. Thank you for watching, everybody. Take care.
Adios. Thanks, Gary. See you soon.
Everyone, welcome to thank you for tuning into this fantastic interview. This has been an amazing discussion. Before our final set of questions for Professor Hanke, I want to direct everyone interested in the metals and mining sector and investments to dive into our Substack at metalsandminers.substack.com. Join our community and receive a free report titled "If You Don't Own Gold, You Know Neither History Nor Economics." That's a famous quote by investing legend Ray Dalio. Consider upgrading to our premium Substack for access to the Inner Circle, the Asset Sentiment Tracker, the Critical Reports Library, and Mining Analysis Reports. You get key intelligence, exclusive content, insider knowledge, and you also enjoy discounts on our investment resources. But even without the premium subscription, there's plenty of free content daily. So visit metalsandminers.substack.com to join us and explore. So thank you for tuning in.